What's going on, and welcome back to another episode of the Mortgage Mindset. I'm your host, Trevor Otsuka. I am a licensed mortgage advisor with Barrett Financial Group. I lend on residential, commercial, private money, fix and flip, things like that. And today we're rocking a solo show. We're going to make it super quick. We're going to dive right in for today's market rate update. Today is December 13th in 2024. And here's what we're looking at for rates. They've actually slowly been climbing back up towards that 7% mark. And right now for conventional 30-year fixed, we're sitting at 6.92%. 15-year fixed is at 6.20. 30-year jumbo is at 7.15%. 30-year FHA is at 6.28, and 30-year VA is right there as well. All of this information can be found for free at Mortgage News Daily. They also have a mobile app. So if you're in the industry, if you want to learn a little bit more about this, if you want to be kept abreast of where interest rates are, you can absolutely download the app. I'm not endorsed by them or anything like that. This is just a tool that I really enjoy using in my mortgage lending business. Let's jump over to econ data. The biggest thing this week that happened occurred on Wednesday, which is core CPI, which is called the Consumer Price Index. There's two of them that they look at. They look at core, and then they look at, at headline. And it's a year over year. So they compare where they're at this year compared to last year and how different it is, if there was growth, if it declined, and then also month over month, which means it's going to go from the previous month of October to the month of November, which is when this report came out. We're going to get into that because that has a little bit to do with our news article headline that we are going to cover. For next week, the biggest movers: Monday, you have S&P Global Services PMI. There's a Fed interest rate decision on Wednesday, December the 18th. So looking at this resource that I use, they're anticipating that the Fed is going to cut their federal funds rate by another quarter of a point. Okay, so that would mean that this year, since they started cuts in September, that they would have lowered the funds rate by 0.75% if in the event they actually do cut a quarter of a percent next week on Wednesday, December the 18th. So we'll keep you posted on that. They're also going to do what's called a dot plot that day, which basically means they're going to do future projections of where they think the interest rates are going to land over the course of the next 3 years. Okay, and every single one of the Fed chairs will give their input. So when you see the chart, it'll have multiple dots. That's basically multiple members of the Fed giving their predictions of where the interest rates are going to be headed over the course of the next few years. And then on Friday, we have core PCE month over month. Okay, let's jump into the news headline. This is from Housing Wire. The link to this article will be in the podcast description below and also on the YouTube. It says, here's the title: November inflation report fuels optimism for Fed interest rate cut. It's one of the reasons why the resources that I'm looking at are stating that they're anticipating a quarter of a point reduction in the federal funds rate on Wednesday, the 18th of next week. So just a general breakdown, there's really three key points that I was able to pull from this. The first one is the Fed's next move, a potential interest rate cut. It says the November Consumer Price Index met economist expectations, with headline inflation rising 2.7% year over year and 0.3% month over month. Core inflation saw a 3.3% year over year increase. With inflation cooling steadily, the Federal Reserve is expected to announce another interest rate cut soon. However, experts caution that substantial rate cuts might not happen until inflation dips a little further. So this just goes back to really the sentiment that they've had over the course of the last year, where we're going to be data dependent. We're going to look at every report that comes out every single month, and we're going to allow the econ data that's in these reports to drive our decision of whether or not we are going to cut, or if we're just going to stay neutral and stay flat with where we're at. Okay. Next one is impact on housing market trends. So it says shelter costs remain high, contributing 45% to overall inflation, but they are cooling, with a smaller month over month increase of 0.3% compared to 0.4% in prior months. This gradual cooling is encouraging for the real estate industry, which is eager for mortgage rates to decline. However, the benefit of rate cuts may take time to lower household costs significantly. Economic and political influences on housing. While the cooling of inflation is positive, President elect Donald Trump proposes tariffs and immigration policies could create challenges for the housing market. Tariffs on countries like China and Mexico might drive up costs for new builds, while immigration restrictions could exacerbate labor shortages in construction. So basically, what they're saying is that it'll create challenges because of the cost of materials that they import if they're coming from Mexico or from China, and then I guess that they already have a labor shortage on building houses, and that could make it worse. So we'll see. Economists predict a tale of two housing markets in 2025. Higher income buyers with significant equity will be better positioned, while moderate income families will face tighter budgets and greater financial stress in the market. So I'd love to hear your guys' thoughts. You can DM me on social media. What do you think? What do you think is going to happen next year, moving into 2025? President-elect Donald Trump taking office on January 20th, and what you have heard so far about his proposed economic policies. Do we think that the housing market is going to improve next year? Do we think rates are going to continue to decline? We've kind of been on this back and forth roller coaster for the last 90 days. And, I don't know if relief is coming anytime soon. Even if he does take office on January 20th, everything that he wants to implement, probably going to be 90 days before we see anything really taking effect. Just like any business plan, it takes about 90 days to start seeing an impact in your business. So we'll see. I'm pretty hopeful that the harder part of this economic cycle is really behind us, and that we're going to start moving into better origination volume as far as loans that are getting done on the lender side, and that more inventory will start to move on the real estate side. So, the Mortgage Banking Association, the MBA, released a chart not too long ago that predicted or gave a projection of origination volume increasing by, I think, 27% over the course of the next few years, which is really promising. So, as always, I appreciate you guys. I love you. I hope that you guys are having a great week, and we will see you next week. Have a good one. Bye bye.